Good day, and welcome to Q4 and FY22 earnings conference call of NMDC Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note that this conference is being recorded. And now hand the conference over to Mr. Vishal Chandak from Motilal Oswal Financial Services Limited. Thank you, and over to you, sir.
Yeah, thank you very much, Neerav. Good morning, everyone, and welcome to the Q4 FY22 earnings call of NMDC Limited. I'd like to thank the management of NMDC for providing us with this opportunity to host them for this call. As we all know, it's a critical juncture, and the government has announced various measures, which obviously the management of NMDC would be discussing. So we have with us Mr. Amitabh Mukherjee, Director of Finance, and he would be joining with the CMD very soon. So without much ado, over to you, Amitabh, sir.
Good morning, everybody. So this has been a great year for NMDC. I believe the results are unprecedented in the history of NMDC. Even the Q4 production and dispatches were the highest ever. If we take the financials for the entire year, they are also the best ever. And it has been a very, very good year, despite the fact that we spent around 5084 crores against the additional royalty that had to be given because of the MMDR Act. So, despite all those, we have managed to record the highest revenue. We've touched 26,600 in terms of entire top line, and revenue from operations of 25,800 plus. So, and the profitability has also increased. So, overall, it has been a very good year. Going forward, we believe that from 42 this year, we should be able to make 46 to 47 million ton. We are planning to do that. So in the coming year, let us see how the prices sustain. There has been a recent downtrend in prices, but let us see how the situation develops. And but we are confident that our volume increases would compensate a little bit, a fair amount of decline that we've seen in prices. Even this year, if you see, when the top line actually grew by around 10,000 crores, around 4,000 crores were quantity driven. 4168 crores was quantity driven, which is the most comfortable thing for us to know. Also, if we see from Q4 to Q4, although the prices had come down and we had lost around 761 crores based on prices, but the increased quantities actually helped us to earn 1,248 crores more. So we will have to depend more on now the volume increase, the top line based on volume increase rather than, I think, on price increase. Let us see how the price situation warms up. Situation actually firms up in the near future. And we are confident that we will be able to meet the challenges that come in this fiscal. So thank you, Vishal. We are ready to take the questions, please.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. The first question is from the line of Prashant from Dolat Capital. Please go ahead.
Sir, good afternoon and thanks for the opportunity. Sir, in light of the recent duties announced by the Honorable FM and the Government of India, and that is sizable in terms of 30 to 50 on iron ore and 0 to 45 on pellets. Sir, now they are doing their part to control inflation or to lower their infrastructure bill or whatever it is, and excise cuts, etc., to help the poor. But as a company, we need to do something to protect our margins and so that the impact is the least on that. So from this point onwards, it's something radically even as an industry, as a company and also as an industry, we need to do to protect our pricing and our margins also. So what, I just wanted to know your thought process on this. Because other commodity like cement, if you see 10, 15, 20, it's also not exported. But then they manage prices so well across markets, even if there is oversupply in various pockets, the pricing is really held up really good. So something even we should radically do different to protect our prices, sir. Just wanted to know your thoughts, sir.
Yeah, two things. So far as the increase from 30% to 50% on all grades, it does not impact NMDC directly because we were not exporting, we were not in the export market. And to that extent, so far strictly as NMDC is concerned, it is of academic interest only. What it of course does is that it increases the flow of low-grade fines. If you see the last 2 years' data, most of the exports were low-grade fines and not high-grade fines. High-grade fines was less than, I think, 3 or 4 million ton. I was, in fact, just going through the in the morning, and the data that I was given was that high-grade fines, when we exported 46 million ton, from 62 to 65 was only 1.4 million ton. And last year when we exported 15.26 million ton, high-grade fines were 62 million ton. Now 58, so most of it were below 58. Some between 58 to 60. Now as in, you know that in India there is not much beneficiation facility that is operational. Some of us have it installed, but it is not operational. So 58 will not necessarily, as per my understanding, affect the market of 64, because had beneficiation facilities been available, then of course you can say it is 58 that will not be exported, will be diverted to Indian market and consumed in the Indian market. Obviously 58 to consume 58 you need to beneficiate it, and not much beneficiation facilities available except I believe in JSW. I'm not very sure if others are operational or not. There are some installed capacity, including our own in Donimalai pellet plant, but most of that is not operational because of issues of disposal of tailings of that. So I do not think again directly 58 abundance of availability of 58 will again impact anything from 64 to 65 directly. They are not in direct competition. So these are the two perspectives so far as we have for iron ore, of course. Regarding pellets, of course, as you know that in several small plants making sponges, etc., pellets are obviously a substitute for lumps. And to that extent, in that market, there would be, when the pellet prices fall, and there would be a certain amount of competition there vis-a-vis pellets, lumps and pellets, of course. But the figure that I was completely sort of a little surprised was that what I have been given from I understand from the steel mint, is that in the last 5-6 days, pellet prices haven't fallen all that much, although the other prices have fallen. The figures that I have for 7 days back at pellet in Raipur has not fallen, pellet in Bellary has not fallen, but there has been a decrease in prices of pellets at Barvin. So still now pellets are holding up until such time pellets actually start falling drastically. That would be a competition to direct competition to lumps. Of course, we have seen the general market, and a couple of days back we have taken substantial price cuts around 600 rupees in lumps and fines, I think 500 rupees or something. I just don't recollect the figure. I'll let you know that. So overall, that is the scenario. Of course, with the steel prices coming down, there might be pressures on our prices, but let's see how it how the things settle. So it's too early to speculate on anything. Go ahead.
Understood. Sir, small follow-up. Sir, the recent price cut, that we have taken, is it, you mean to say it's got nothing to do with the announcement? It is generally market driven, which was prior over 15-day lag, something, the Chinese prices falling, etc., or is this got something to do with the government action also? It has that forced the market to take these higher cuts?
No, because basically if you see just before the pricing, we keep a tab on how the steel market was doing. Even before the price cuts, I think the prices had corrected by 2,000-3,000 rupees across the board in HRCs and in longs also. So there was a correction even before that. The correction has continued after the duty impositions, all of that. So that to that extent, some amount of correction was required irrespective of the duty cuts. Let us see how it actually sort of stabilizes, because lumps we have cut by 600 and fines we have cut by 750. So to that extent, I think the prices of steel and others, also what happened just before the announcement, our offtake from Chhattisgarh had almost, it was being affected. And a lot of offtake was being affected, so we had to make a price correction. And thereafter, now we are watching what is the price situation developing in the steel sector and the iron ore sector.
Understood. Thank you so much for your thoughts and all the best.
Thank you.
Thank you. The next question is from the line of Amit Dixit from Edelweiss. Please go ahead.
Yeah, good morning, everyone, and thanks for the opportunity. I have two questions. The first one is essentially on inventory, which has gone up sharply during the year, and receivable is also up compared to last year. So, first of all, if you can let us know the reasons for the same, and are there any chances of reversal in working capital build-up that we saw last year?
Let's take the receivable part first. I'll just brief you on that. So the receivable are basically one major component is the monitoring committee. Now, thankfully, what we understand, in a couple of days we'll be doing direct auction, and the monitoring committee, we do not need to go through that monitoring committee. And of the receivables, around 1,700 crores were towards regular dues of monitoring committee, which of course today when the auction is held, they get the money, but they give it to us after the last consignment of that auction has been taken by the bidder. So there is a gap of sometimes 1 month that increased because some of the bidders were not lifting what was there. So around 1,700 crores were on trade receivables in the year-end from monitoring committee. That of course has been liquidated, but fresh dues have again been there. So that's a continuous process, and that will thankfully come to an end when we start our auctions by ourselves. So now the monitoring committee will not be, the routing would not be through monitoring committee. What is very good is, and since we are mentioning monitoring committee, that monitoring committee was retaining 20% of our earnings towards SPV and towards ECL. Now, when we are going in for, after the Supreme Court judgment, when we are going in for our own auction, that would not be there, and we stand to gain 20% on all the auctions that are done by ourselves rather than by the monitoring committee. So that's a big plus for NMDC. Another major component is, of course, RINL, and that is the only company where we supply on credit. So that was around 1,294 crores. But we have now entered into a bill discounting mechanism with involving RINL. So this, in every 3 months' time, will get liquidated and will discount the bills at a very nominal cost, and that discounting cost will go to RINL themselves. So that we have worked out a permanent mechanism so that the cash keeps coming, even if it is slightly delayed than others. That is the only party we sell on credit. And of course, then there is some miscellaneous 3 crores from NMDC and 21 crores, which are more or less 21 crores towards regular dues, which has been liquidated since, and some about price revision areas. Those are some miscellaneous small factors. So this is about trade receivables. Now, if you are talking about stocking, yes, our stocking has gone up by around 1.5 million tons, because last year our sales were more than the production. Now, as the production goes up, naturally there would be some amount of stock build up, and that is nothing to be alarmed about. It's about 1.5 million tons. Last year it was actually much lesser. So that's a normal part. When the production goes up, some amount of stocking would obviously go up. Anything else on this subject? Then I can.
Sir, just one follow-up on this. What would be the ECL accrued that is with the monitoring committee? I think if the monitoring committee mechanism is dismantled, then you would get that also back.
No, that would require a Supreme Court order, which we have been pursuing the Supreme Court for a long time. So that would be 2848, and that would straight away, the day we get it, add to our PAT. Not to our PBT, but straight to our PAT, because we have been, although in the books of accounts writing it off, it has been constantly disallowed by the income tax authority. As a result, we end up paying tax on that. So as and when this 2,850 odd crores come to us, and I think it will not require more than 1 or 2 hearings of the Supreme Court. It will depend on when their lordships decide to hear our case, but 1 or 2 hearing, and we are ready to get that 2,800 crores. So that will be a windfall gain straight away, adding to our PAT as and when we get it. But that will require not only the dismantling of monetary committee, but actually a Supreme Court order. And this is only 10%. We are not expecting the other 10% to come back to us, because that is our contribution towards SPB.
Okay. The second question is on other expenses, which have gone up sharply in this quarter despite nil exports. So any specific reason for that?
Yeah. I'll let you know. Only you want quarter to quarter or year to year?
Sir, both will be great.
This is year to year. Let me talk to you about year to year. Of course, it has other expenses have gone up by the other expenses. Other expenses is just a minute.
64%.
Achha, so you have some amount of increase in expected credit loss. That's gone up by 325%, because the prices were high and it is an ad valorem charge. So naturally, the higher the prices, the higher the expected credit loss. Then you have the mine closure obligations, which have gone up by 49 crores. That is because we keep on reviewing our cost per ton for mine closure obligations every year. And this year our provisioning has increased by around from 17 rupees 10 paisa to 18 rupees 45 paisa per ton. As a result, it's cost us 50 crores extra. And CSR, of course, has been there for around 129 crores extra. SPV is like, again, the expected credit loss. That is an ad valorem rate. When the prices went up, so naturally our contribution to SPV would go up. And to that extent, RINL, we have settled a dispute that has cost us around 72 crores, because we were having a dispute with RINL for around 150 crores regarding underloading and loading charges, and where there were discrepancies. So we have settled it halfway with RINL, around 70 crores to their account and 70 crores to our account. So these are the basic major heads where it has actually increased.
Sir, if I look at this quarter in particular, it has gone up very sharply. It used to be like 440 quarters, 400 to 500 crores approximately, for last several quarters. But this particular quarter, it is 1,014 crores. So I was wondering, why it has gone up.
So ECL has gone up by around 107 crores. SPV has gone up by around 41 crores. Mine closure obligation has gone up by around 37 crores. CSR expenditure in this quarter has actually gone up by 140 crores. So these are all the big ticket ones that have gone up. Although the export duty and railway freight has actually come down to zero. So previously it was around 90 crores and 70. So 163 crores has come down on that, but it has been more than compensated by the ECL and the SPV expected mine closure obligations around 37 crores in the Q4, CSR by around 140 crores, so and around 6 crores by the enabling facilities.
Got it, sir. Thank you so much and all the best.
Thank you. A request to all the participants, please restrict to 2 questions per participant. The next question is from the line of Siddharth Gupta from Voyager Capital. Please go ahead.
Hey, congratulations on the great result. Sir, my question
Thank you, Siddharth.
My question is with regard to the demerger. So we were told that the next update with regard to it would be around July. And when will the plant be commissioned, and when can we expect some further updates on it?
The next big event in the the demerger calendar is on 7th of June, when there is a meeting of creditors, the MCA. The MCA has given the direction that this meeting of creditors and meeting of shareholders will both be held on 7th of June. Notices for which have been sent on 4th of May to the respective creditors and shareholders. And Additional Secretary MOS, Madam Rasika Chaubey, has been nominated by the MCA to chair both the meetings. So this will be held, and once that is held and passed by both the creditors, and these creditors only about 1 crore have been asked by MCA to be there for electronic voting and registration. So after that, these are carried through in both the creditors forum and in the shareholders. We will be going back to the MCA, and I think thereafter it should take around, once the orders are passed by the Government of India, then we need to file it back with the stock exchanges, and then we need to extinguish the shares of NMDC and NCL and issue share in the ratio of 1:1, and then list that share in the stock exchange. So apart from listing, my estimation is it should take around 3 months after we file the compliance or the detailed report regarding these meetings on the 7th of June. So let's see, and another couple of months maybe for listing of shares of NMDC Steel Limited.
Right.
So this is so far as the demerger story is concerned. Anything you need to ask on demerger, then I'll move on to the plant commissioning.
No, sir, I want to ask about the commissioning itself.
The commissioning, as you know, we've been heating the coke oven for now 3 months. Coal consignments have already arrived at Nagarnar. We are ready for coke pushing, but unfortunately a major breakdown happened in the oxygen plant, in the sense that one 11 kV motor got burnt, and our experts tell us and Nikon experts tell us that an 11 kV motor is as big as this room that we are sitting in. It's not a small motor, it's a huge motor made by BHEL. Apparently they have not seen such a motor burn out in their lifetime. The engineers with 30 years of experience tell me that it has never happened in their lifetime, but that has happened in Nagarnar oxygen plant. As a result, of course, that there will be a lack of availability of nitrogen, and as you know that this coke oven is to be dry cooled. Instead, dry quenching has to be done with nitrogen. So we are looking for alternative ways, including getting nitrogen through tankers. And of course, this motor itself has already been sent to Bhopal works of BHEL, and they are getting it ready. So once that is ready, that should take another 10-15 days to come to Nagarnar and get reinstalled. And then we'll have a steady source of nitrogen. But to that extent, so far, because we will be doing 3 months of coke pushing to be able to build the coke stock so that we can light up the blast furnace, or at least 2 months to lagega hi. So by that 2 months, I think we should be able to arrange it through tankers. It takes about 1.5 tankers per day for the coke to be quenched that comes out of one coke oven battery. And by the time we can do the second coke oven battery and those things. But this was a setback. So this was a major setback which was there. So the heating has already reached the critical temperature. And the coke, at least I think 3 or 4 rakes have already arrived. One shipment has arrived at Gangavaram, and I think out of that 4 or 5 rakes have already arrived at Nagarnar. The rest will also arrive shortly. So we are otherwise ready with the first part of the thing, and then it is a chain of events that happens one after the other.
Right. So that was unfortunate to hear about that oxygen motor. But sir, if I've understood correctly, the plant should be even according to your estimates, by the end of July or beginning of August, we should be able to commission the plant through other ancillary measures.
That's the current outlook. I hope by that time the BHEL motor comes back and we are able to do that, because operating a full-fledged plant based on nitrogen from tankers would be a risk factor. But that is not a major problem so far as we are building up coke stocks, because the blast furnace by that time has not been lighted up. But once it is completely synchronized with the blast furnace requirement, then it is obviously that we would like the oxygen plant to supply us with enough nitrogen.
Right. Okay. Thank you, sir. Thank you so much.
Thank you. The next question is from the line of Rajesh Badre, individual investor. Please go ahead.
Hello.
Yeah, hi Rajesh.
Good morning, sir. Good morning, sir. Yeah, my name is Rajesh Bhandari. You just now mentioned that next year our production could reach to something around 46 to 47 million tons.
That is where we are looking at.
Yes, sir. Yes, sir. So in this, how much will be the 64%? And how much will be the lower grade?
We don't actually mine lower grade at all. All our production is around 62 to 65%. A lot of this, around 2.3 million ton, will come from Bacheli itself, because you see the fifth line of screening and the downhill conveyor augmentation, which was halted last year because the consultant has gone bankrupt. That was, I think, SR projects have gone bankrupt. As a result, we didn't have the consultant. Now that we have appointed the consultant around 3-4 months back and the work is done, so that will give us an incremental straight away of around 2.5 to 3 million ton at Bacheli itself. And the rest would be the incremental increase in the other projects. We are also driving hard for the ceiling. If it is readjusted at Karnataka, so we'll get another 3 million ton out of Kumaraswamy. From 7 it can go up to 10. We are having our contracts in place for 10, because Kumaraswamy, as you know, is mostly private mining. We do it through raising contract. So we are now, this contract would be, instead of 7 million ton, we are already designing the contract for 10 million ton in anticipation that sooner or later we will be able to increase our ceiling from 7 to 10. So taken all of these, because we deal in high grade only, and low grade is sometimes only an aberration because of the geology of a particular mine, but we deal with 63 plus, definitely 62 plus, and mostly it is 63, 64, and in Bacheli it is 65 also. So to that extent, yes, we are looking at some around 47 this year.
Yeah. So sir, जिसमें आपने बताया कि normally it is 62 plus grade.
Yes.
So and we do get 65 grade also.
Yes, especially from Bacheli.
And you also mentioned the 64 grade and above has normally no competition.
Yes, because most of Odisha is 62, 61, 62. Most of Karnataka is 62, 63.
Out of 46, 47 million ton, production what we are anticipating, how much is going to be the percentage roughly of 64% plus, where we will have not much of competition?
You see, the Bacheli mines that produce the 64 grade and 11B that produces deposit 5, which is 65% normally, and most of the DRCROs come from there, and 11B in Kirandul, which is again a very high grade mine. These two taken together produce about 15-16 million ton in these two mines. But at the time of selling, we see what sort of demand is there, and if required, we blend it with a slightly lower grade to get it to 64 also. It is not that whatever we mine straight away, we sell it. Some amount of limited blending to meet our customer requirement is also done at the point of dispatch. So it really doesn't matter how much we mine. Of course, we mine around anything between 13 to 15 million tons from these deposit 5 and I think 11B, which are very, very high grade mines. And so that's Kumaraswamy and in Karnataka is obviously slightly lower grade. It's around 62, 63. But most of Bailadila is very high quality.
And our lumps as well as fines, both are normally 62 plus grade only.
Yes, we don't do below 62.
अपने normally customers जो हैं sir, they are all fixed customers.
70% of our sales is to 3 big customers. So that is JSW, ArcelorMittal and Vizag. 70% of our sales is there, and then there is a big market in Raipur that we have. That is another 10%, let us say, around 4 million ton at Raipur. It depends, somewhere around 3 to 4 million ton at Raipur. And Raipur is a conglomeration of many sponge iron and DRI and all those things. So that would be around, let us say, Raipur and 3 main is around 70%, and Raipur would be around, again, another 15%, let us say.
और 15% छुटकर लोग होंगे.
बहुत कम.
जी. Thank you very much, Rajesh. Sorry to interrupt you. Request to come
just one more question. Just one more question, if you permit me. Sir, you said direct auction when you do. You will be benefited by 20%.
Straight away.
Yeah. So how much direct auction you will be doing, sir?
Well, 14 million ton hai. You see, in Karnataka, our production is around 12 to 14. Our ceiling is 14. We did, I think, 13 last year. So this year we'll definitely do 14. So 14 million ton we were compulsorily doing through the monitoring committee. Now this entire 14 million ton we'll be doing ourselves. So 14 million ton ka 20%, last year we did 12.19%, 19 million ton. So this entire 14 million ton, 20% of that would be coming to our kitty, which we were otherwise losing. And that is, if we talk about 14 out of 46, so that's quite about 30% of our...
That's 30%. That's 30%, quite a good amount.
Yeah, 30% ka 20% agar aapke ghar mein aate, it's a huge amount. It's something that's a big for us.
Yeah. तो अपने जो परमानेंट कस्टमर्स हैं सर, तो 47 टन जो आप माइनिंग करेंगे, तो इन्वेंट्री बढ़ने का तो कोई ज्यादा चांस नहीं है.
देखिए, इन्वेंट्री हमारी बहुत ज्यादा एक लेवल के ऊपर बढ़ भी नहीं सकती है, बिकॉज मोस्ट ऑफ आवर माइनिंग इज एट हिल टॉप एंड डिस्पैचेस आर फ्रॉम द वैली. So where we get it down by a conveyor belt, so as you know, the valley will always have a limited space of stocking.
जी.
So there is no way that if I wish I can stock 8 million ton or 9 million ton or 10 million ton. It's not a plain land like Australia mining is, right? So I have physical constraint of space. So beyond a particular limit, obviously, stocking of physical goods is not possible.
जी. नहीं, क्योंकि मार्केट में अभी बहुत लोग आएंगे आयरन ओर वाले, तो
नहीं, मैं जो पहले में बता रहा था कि देखिए मार्केट में जो आपकी एक्सपोर्ट क्या होती थी, अगर आप देखिएगा 95% ऑफ द एक्सपोर्ट वर अराउंड बिलो 60 एंड 90% वाज बिलो 58. एंड आई सेड कि बिलो 58 का आपको मार्केट कहाँ है इंडिया में, आपके पास वेरिफिकेशन फैसिलिटी कहाँ है. जो है वो बंद पड़े हुए हैं. मेरा ही 1 million ton का beneficiation facility बंद पड़ा हुआ कर्नाटक का pellet plant में. Why? Because I do not know where to, I don't get the forest clearance and other clearance for sending my tailings. भाई आप beneficiate कीजिएगा तो tailings निकलेगा. There will be tailings. The more you beneficiate, the more the tailings. Now where do you store your tailings? So you don't get a permission. So my 1 million ton beneficiation plant which is attached to the pellet plant is lying idle. And that is, whosoever has beneficiation plants in India would be lying idle on the same account, because you can't do anything to with the tailing. Except I am told for JSW at Tornagalu, nobody has operational, I have been told this, but this has to be re-verified, but except for that, I don't think anybody has operational beneficiation facilities right now. A lot of them might have installed beneficiation facilities, but operational, I have my serious doubt, except JSW, which does it for its own pellet plant within the Vijayanagar. This is what I have been informed.
Thank you. Rajesh, I'll request to come back in the question queue. The next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Yeah, namaskar sir, and thank you for this opportunity. Sir, when we look at your... Yes sir, hello sir. Sir, when we look at the cash flow, the provision for bad and doubtful advances stood at around 560 crore. So this has a major component of this expected credit loss only?
ECL and SPV. We don't sell any credit, we don't give any credit facility to any of the customers except RINL. And with RINL also now I have entered into what is called the bill discounting system. So I don't have. So this is the only provision, and from next year you will possibly not see it, because we had around 560 crores of expected credit loss and SPV for another 481 crores. So these are the only provisions that are made. No other. None whatsoever.
So this line item is not going to appear next year, and it is a direct gain to this.
Unless the government comes up with something else. As of now, nothing.
Because the mechanism of this monitoring committee gets dismantled by what time?
Yes. Now the customers will directly pay to my bank account rather than paying the monitoring committee, because we are ourselves holding the... I think the next auction would be in a couple of days only. Today I filed the proposal for auction by NMDC itself. So that would be the first of the block. Let's see in a couple of days, I think.
Yes. Sir, you spoke about this... Hello?
Yes.
Yes, sir. Sir, you spoke about the offtake being an issue at the Bacheli unit, sir. So,
last around 8-10 days, yes, because you see, a lot of it also depends, as I say, ki Raipur vagara mein, because that time a lot of size door is going to Raipur and Chhattisgarh. The thing is that people sometimes stop lifting in anticipation of a price fall. Okay? That can happen. The prices will fall further. It's like deferring buying of shares. In a bear market, okay, let it fall a little bit more. All that sort of thing. So there was the normal uptakes had actually come down in the Bailadila sector, especially from the Raipur belt. So I think now that the prices have corrected, things will improve.
The situation is still status quo as of now, because the price correction has happened 2-3 days earlier only.
So now there's some amount of movement there, yes.
Okay. Sir, so why have the employee benefit expenses gone up, sir, if you could explain, quarter on quarter and year on year also, more than 50%?
Yeah, let me explain year on year. So that has gone up by around 252 crores. But a major component of this is that there was a loss in the investment of PF Trust. That's about 110 crores. The PF Trust at that point of time had invested in ILFS and Diwan Housing, which were at that point of time AAA rating, but and I think Reliance Capital also. There was some cumulative that, and naturally the PF Trust has to be reimbursed as per our trust laws. So that cost us about 100 crores. And there was if you know that DA was frozen, and when it was unfrozen, so that cost us around 22 crores. And then there was a wage revision provision because, the workman wage revision is done every 5 years and now it is due. So we have started providing for, in anticipation of, for that, because that was due for 3 months. So the proportionate provisioning came to around 21 crores. And we had declared some special incentive, etc. When we touched the epoch making 40 million ton, so that cost us around a couple of crores. So these are the major heads where things were went
how
up.
Will the annual number look, sir, now, going forward?
Going forward, obviously, the loss of investment of PF of 100 crores will not be there. The DA increase would be normal, and obviously the special incentive would not be there. But the wage revision provision of around 20 crores will be on an annualized basis, be around 60-70 crores. Yes.
So out of this 1,300 crore annual, this 1,200 should be the next year number in proportionate to, if we remove the one-off item.
Yes, if you remove the one-off item, around 1,150 to 1,200, anything between that.
1,150 to 1,200 would be there. And sir, what is our update on the capex on the projects that we have lined up for this year, especially the slurry pipeline? And sir, you spoke about this pellet plant, and we have been losing money on a quarterly basis. Although the year-on-year losses have come down from 133 crore to 71 crore, but still.
This year we made a loss of only 2 crores in pellet plant. From 71 it has come down to 2 crores.
From 71 to?
2 crores.
Sir, but in your other, in the segment result, it is reflected pellet, other minerals at 71 crore only.
It includes others also. No? You have Panna for 61 crores, where the mine is closed. We lost 61 crores. And then Palwancha, we lost around what? Palwancha was around 23 crores. Pellet plant is only 2 crores, and now there was a head office, of course, with a profitable organization of 39 crores plus.
Yes.
So, but pellet plant we made a loss of only 2 crores.
Okay. On the royalty part, as it is now 22.5%, the additional one. So what?
We paid 5,084 crores on an annualized basis.
Yes.
For the 12 months against 149 crores were we paid for the last 4 days of the last year.
Thank you. Sorry to interrupt you, Saket. I'll request you to come back in the question queue for a follow-up question. I request to all the participants, please restrict to 2 questions per participant. If time permit, please come back in the question queue for a follow-up. The next question is from the line of Mohammed Farooq from Pearl Trading. Please go ahead.
Hi, Farooq.
Farooq, may I request you to unmute your line from your side and go ahead with the question, please?
Hi, good morning.
Hello, Farooq.
I'm a minority shareholder. I'm holding shares for the past 15 months. What I think, regarding the minority shareholders, being misled for the past 15 months with the demerger postponing for the last 4 quarters. Again, second question is what steps are taken by the management to improve the value or the PE ratio of the company? If you unlock the steel plant, which is almost 20,000 crores, and your market cap is 35,000 crores, your PE is only 1.5, which is one of the lowest in the world. So what does the management do for this? I am holding for last 15 months. I'm participating in all the conference call, and every time I hear the demerger is postponing by 3 months and 3 months and 3 months. I'm losing money. Can you please explain? Thank you.
I do not agree with your thing that we have been taking you for a ride or something. I would strongly object to such insinuations being made against the management. I would strongly, in the possible terms, I would tend to disagree with the insinuations that you have been making. Now, coming to your question, of course, as you know, that the demerger is a process, and there has been no delay in compliances of the requirements so far as NMDC is concerned. Be it filing of the first appeal, be it taking of the permission of the stock exchanges. Now, these organizations, whether it is MCA or the stock exchanges, they have their own procedures and own timelines. of working. So finally, after pursuing MCA, we have been able to get this date of 7th of June for this next big event in the demerger calendar. So there's no way that there has been any delay on NMDC's part, and this, if you believe, whatever has come has been one of the fastest so far, not only in PSUs but in possibly the demerger process in other sectors. So I would completely disagree with you that we have been postponing it by 3 months every time. Our compliances have been there, but it does take regulatory and procedural approvals, and these come from organizations which are not within our control, and despite our sincerest and the hardest follow-up, this is the best timelines, I believe, not only in the PSUs. I do not recollect of a demerger of a PSU and their timeline, but in the other private sectors also, this is absolutely one of the fastest possible things. Regarding the PE ratio, I think the company, I think it is right now at 3.55, and of course the markets would take cognizance of the performance of NMDC and the expectations of NMDC, but I will not speculate on how my share prices would be doing. We are, I think, as a corporate, it's a very well-run corporate, and I think if I were an individual investor, the prospects of the company, as I have been explaining, both in terms of physical growth and in terms of financial growth. Physical, I am saying we are going from 35 to 47 in 2 years. I don't think anybody else can possibly have a complaint against such a huge, massive growth, and so is the financial growth has been more than extraordinary, going from 15,600 to around 26,600 crores, and going further with the help of ECL and others being abolished, we will be able to, I think my own expectation is that we will be able to overcome or compensate the losses that might be there on account of a certain amount of price being on the lower side as compared to the previous 2 years. So I think all in all, the prospects of NMDC is rather encouraging. Thank you.
Thank you. The next question is from the line of Ritesh Shah from Investec. Please go ahead.
Yeah, hi, sir. Thanks for the opportunity and congratulations for a good set of numbers.
Thank you.
So my first question is, if you could quantify the capex number for FY23 and 24, and if you could give a broad split of the capex, that would be, sir, very useful.
Capex, we are actually aiming around 3,500 crores this year. This year we are aiming at around, of which around 1,500 crores will be regarding commissioning expenses of the Nagarnar steel plant. Now that the commissioning will kick in. So there are milestone payments related to commissioning and price variation clauses that will also kick in simultaneously. So that should cost us around 1,500 crores. Slurry pipeline should be another 850 to 900 crores, anything between that, because as you know, the pellet plant contract of around 1,000 crores has already been awarded to L&T, and basic design engineering work is under progress. The pipeline laying work was about 1,000 crores. It was allotted about a year back, and a lot of pipes, etc., has already been bought. That is in full swing, and the beneficiation of facilities had to be retendered, but that I hope it will be done soon. So let us see what that is. Another major area of expenditure would be the slurry pipeline, because the works are now in execution phase. And then, as you know, that the third screening plant at Kirandul, which is another 3,000 crore project, that has also been awarded. The major contract of that is around 1,400 crores that has been awarded around 6 months back, again to L&T. So we expect around anything between 300 to 500 crores being spent on that contract as well. So overall, out of the 3,500 crores, these three big ticket ones should cost us we should be able to spend around 2,800 crores on these three big-ticket investments. Apart from that, we have the development for coal blocks in Rohne and Tokisud. That should cost us around 250 crores in terms of various approvals and land and all those costs. And then we have miscellaneous expenditure. The rest of it, about 200-300 crores, would be on the various miscellaneous projects that we have.
Sir, this is very useful, very comprehensive. Sir, my second question is, how much was the total capex for the steel plant? How much of it has already been done? And the balance capex, how it will be funded, whether it will be a loan, NCD, how should one understand that? Thank you.
You see, the cumulative expenditure till date on, and I'm talking about May, up to May, is around 20,420 crores. Right? 20,420 crores has already been spent. The estimated expenditure is around 22,000 crores. So that's around 2,000 crores more to go. And mostly it is either commissioning related milestone payment or a little bit of price variation here and there. So these are the two basic heads. So the rest of the 2,000 crores, about 1,500 to 2,000 crores will be spent. We expect around 22,000 crores to be spent. That is the revised estimate. So that is the one. What was your second question? Sorry, I completely forgot.
Sir, the balance 2,000
Ritesh, sorry to interrupt you. May I request you to speak louder, please?
So my question was, the balance 2,000 crores, how it will be funded?
Oh, yes. Oh, sorry. Yes. So, as you know that there is a credit line with State Bank of India for 4,400 crores that we have actually entered, of which we have drawn till date around 1144 crores. So there is more than 3,000 crores, 3,400 crores which can still be drawn from that credit line. So I don't think funding is going to be an issue at all. Funding, commissioning, and initial running till such time it starts generating its own revenue, I don't think that's going to be a problem at all.
Right. So this is very useful. Just last question, sir. By when do we expect full commissioning of the steel plant? Any particular date, month that you have?
Full commissioning, what do you mean by full commissioning? You mean by rolling out of the coils, or you want the blast furnace to go in?
Rolling out of the coils, sir.
So, from the date we start, let us say, and I'm just thinking aloud now, so coke pushing would be around 2 months, let us say at least, and if we start that by June, mid, then 2 months of coke pushing and then followed by about a month of the other things. So June, July, August, so that should be somewhere around August and September.
Sure, sir.
Because once you light the blast furnace and you have hot metal coming out, you need to do, you better have your SMS and the rolling mill there, because you know it's a single line steel plant. I just can't do anything with the hot metal.
Correct. So, sir, I presume the slab caster and HSM is already in place, right?
Yeah, but the slab caster has been tested also. It's being regularly being tested also.
Okay. This is very helpful, sir. Thank you so much, sir.
Generally is doing that, and they've been up and ready. And the SMS part is also under testing. The entire people from Prime Metals are there. So that problem had been solved long time back.
Thank you. The next question is from the line of Sumangal Nevatia from Kotak Securities. Please go ahead.
Yeah, good afternoon and thank you for the opportunity. So a couple of questions. One, you shared a lot of details on the steps for the steel plant demerger and eventual delisting. So if you have to conclude and summarize, what is the realistic timeline? Is it fourth quarter of this financial year or FY24? Are we looking at delisting of the plant?
No, I don't think it will be next year. Because if you see, 7th of June is the big ticket event. That is the main event. Right? Once we get it, and we'll be able to file it with the MCA for the orders of the government within June, much within June itself. Okay? So I think thereafter, right up to the listing of NMDC steel share should not take more than 4 to 5 months. That's our estimate. That includes listing of the share itself. So we have, once we do this, and then we go for the final hearing of the MCA, and then the government will ultimately pass the order for sanctioning of the scheme. And now, because the government itself is following us very hard regarding the demerger process, and DIPAM is obviously pursuing this with us very, very strongly. So I would be very optimistic about government taking the least time to issue the orders once the compliance boxes have been sort of checked. And this is the one major thing, event is 7th of June. So I guess then things would be expedited.
So December is when you're
hopefully after 7th of June, another 4 to 5 months max.
Okay. So by December, you're expecting it to get listed. Okay, got it.
I would hope before that also. Now it also depends on what, if SEBI takes some time at the final stages, or the stock exchanges take some time in the final we can only follow them, but they are not under our control, so they have their own internal procedures and due diligence, all those things. But I think, yes, 4 to 5 months would be fairly comfortable.
Understood. And the steel SPV, so what sort of debt will it have eventually, given we have credit lines, etc.? So what will be the capital?
We had an NCD of around 530 crores. And we have drawn about 1144 crores. So if it was to be demerged today, it will have a liability of around 1700 crores as on date.
Understood. So second question on the employee cost and the capex which you shared. So employee cost, what is the guidance in the coming quarters? I mean, given that there was a very sharp increase this year, so guidance for the coming year.
One of the about 100 crores was due to the reimbursement of the loss of PF trust. So as I said in one of the previous questions, from 1,000 crores, it's likely to go up to 1,082 crores was last year. I think this year guidance would be around 1,200 to 1,250 crores max. 1,200 crores, let us say. Because from one-time expenditure like this PF trust laws or the special increment or those things will not be there. So I think my own estimation would be around anything between 1,200 to 1,250, let's say 1,225 sort of thing.
Understood. And sir, lastly on the capex, if you add up all the heads which you shared, with slurry pipeline 800 crores, pipe laying 1,000 crores, steel plant 1,500, then screening plant, development of coal blocks and miscellaneous, I mean it comes to around almost 4,500 crores. So
don't add back when I'm saying 900 crores, it's for slurry pipeline. Now slurry pipeline has both the contracts of the pellet plant of 1,000 crores and the pipe laying. Taken together, we expect anything between 800 to 1,000 crores in these two major contracts. Similarly, steel plant is about 1,500 crores, and the out of the 3,000 crore contract, about 1,400 crore contract of the third screening plant, we will be spending around 400 to 500 crores. So these three big ticket, as I said, is anything between 2,700 to 3,000 crores. These big ticket ones. The coal is around, let us say, 180 plus 60, around 200 to 250 crores. So that's 3,200, 3,300 on the 5 big projects. And the rest is miscellaneous.
Okay, understood. And just one last thing, sir. This December, the Karnataka mine is, Kumaraswamy is coming for renewal. So do you foresee any sort of disruption or a gap in production or a smooth process unlike last
in October, and I think now that the issue has been settled regarding the renewal premium, which is 22.5%. So now that the rules of the game have been settled, I do not see much of a challenge on that. We are doing our homework, and all those applications and etc. have already been made, and things are already been pursued. I am sure that this time we do not expect disruption even for one day.
Got it. Thank you and all the best, sir.
Thank you.
Thank you. The next question is from the line of Rashi Chopra from Citigroup. Please go ahead.
Hello, Rashi.
Thank you. Hello. Good afternoon, sir. So this question on the, you've mentioned that 46, 47 million is what you're targeting in terms of volume this year. From a selling perspective, do you see that this entire volume, that incremental 6-7 million tons, is going to get absorbed without impacting pricing?
Oh, yes. I don't think demand has still been an issue because, as I said in a question earlier, that around 70% goes to three big ones that we have, and around 10-15% to the Chhattisgarh plants, which are basically dependent on high-grade ore from us only. Considering that our grade and considering the requirement of our main customers, I don't see the challenge because, as you know, that most of our customers have their own expansion plans and have their own requirements, which is much in excess of what is our incremental production. So I don't think that is something that I would be very concerned about at this stage.
Okay. And on pricing, do you anticipate that, we've already taken a correction of 600 to 750. Do you anticipate that there can be a further correction in June?
I will not speculate on prices. That would be suicidal for us. But let us see how these are early days because you see the duty imposition has only been for around 7 days. So most of the discussion in the industry and in the pink papers are morely academic, and we have not seen the actual effect, the long-term effects of the things, how it depends on the prices. So we'd give it some time, and I would not speculate on how our pricing would be in the future. So let us see the price movement of steel and other iron ore producers in the new duty regime which has been implemented. So I'd keep my fingers crossed and hope that the prices would stabilize around what we are currently right now.
Okay. Thank you so much.
Thank you. The next question is from the line of Satyadeep Jain from Ambit Capital. Please go ahead.
Hi, thank you. Just a couple of questions. One on the steel plant commissioning. Now we understand Mekon has been hired to hire people for running the plant. Where are we in that process of finding the team to run this plant when it comes on in the next month?
They have already been hired, and some of them are already some of the boots are already on ground, and some very senior personnel is also now stationed at Nagarnar. People who have been chairman of major steel producing company, have worked with almost all the steel majors, and very senior retired people who have kindly agreed to join our efforts in commissioning. Mr. Singh, just a minute. जो नगरनार में है Mr. Singh, the ex-chairman of RINL. I'm just forgetting his name. He is also there. So we have had some people with great experience and great standing in the steel industry who have kindly decided that they would be stationed at Nagarnar and oversee the entire process. And we are lucky to have such experienced people. I think B.N. Singh sir is there already, who was the ex-chairman of RINL and has worked almost everywhere with JSW, with all the big names. He has been at very senior positions. Apart from that, we are getting experienced hands from all over the steel industry through Mekon, and a substantial part of them, a few of them have already Shri B.N. Singh is also overseeing our efforts, and a lot of people with adequate steel experience from various steel plants have also joined in, and more are to join. Some of them have their notice periods to serve, etc., etc. And naturally, the critical staff is already there, and those people would be joining by the time we are completely in the full role of the commissioning process.
Okay, that's good. So second question on the pricing, maybe a follow-up to Prashant's question in the first question, and then some of the other questions is the objective for Coal India is to maximize the energy security, whereas the objective for NMDC is to maximize shareholder returns. Now, NMDC is also the largest player in the merchant market. The pricing has an impact on the IBM prices also. Can we just want to understand, any future pricing action will be driven only by market dynamics, or is it just market dynamics that will determine the pricing for NMDC iron ore?
Market dynamics has been the only criteria that we have followed for what we call is our pricing strategy and philosophy. There is no other consideration. We cannot have any other consideration because around 80% of our sales are to private steel makers. So naturally, we play by the market, they play by the market. So naturally, it's a completely market-dominated strategy on both the ends. So, unlike, I would not like to speculate on what Coal India does or others do, but so far as we are concerned, obviously it's purely market-driven, and it has to be market-driven always, because if you leave out RINL, which accounts for around 20% of our consumption, the rest of the entire consumption is by private players, and we cannot have any other strategy other than those being driven by purely market conditions.
Okay.
Go ahead.
Thank you so much.
Thank you. Next question is from the line of Pallav Agarwal from Antique Stock Broking Limited. Please go ahead.
Hi, Pallav.
Hello, sir. So just a question on, what is the closing cash and cash equivalents, including some of the long-term liquid investments as of 31st March?
We had some 7,000, I'll just give you the figure. Just 1 second, please.
Yeah.
7752 was the closing cash balance on 31st of March, of which 5,500 were with PSU banks and around 2,997 crores were with private banks. At that time, we had already redeemed all our mutual fund for payment of taxes, etc., etc. So around 7752 was the cash balance then. 7816 was the cash balance is right now.
And so this is after paying dividend, right? So we only...
Yeah. I'm talking about 31st of March when the entire dividend was already paid, and I'm talking about 24, today is 26th, and I have the cash, 27th, I have the cash balance as on 24th, which was 7816 crores.
Sure, sir. So also just, it would help, I think in your presentation, there's a slide on the basic domestic price of iron ore. So if I look at that, the Q4 average was about 4,440 rupees per ton. So, and just when you calculate the blended realization, it comes to close to 5,400. So is this just the royalty thing? What else is, how does this, add up?
This is basic. We do not add royalties. This is what I charge. So you'll have 15% royalty over and above this, 30% of 15% of DMF and NMDC, and 2% of DMF and NMDC over and above that. So, but the 22.5% comes from within this price.
Okay. And so lastly, so now, once Kumaraswamy also is renewed, so then we can assume a flat, royalty rate. I mean, there will not be any discrepancy among mines and problems.
Yes, definitely.
We should be at about...
One good thing about, now that you are all listening, I've forgotten to just flag another benefit for NMDC from this entire self-auction at the Karnataka sector, and this is very, very important because that's going to add to our top line. In the monitoring committee setup, what was happening was that the royalty was being collected extra over and above our basic price by the monitoring committee. But the DMF and NMDC were being paid from our pocket. So if I collected 100 rupees, then 15 rupees additional was being collected by the monitoring committee, and out of 115 rupees, 15 rupees was being paid to the Karnataka state government towards royalty, and 20 rupees was being retained by them, and then the rest 80 rupees was being sent to NMDC. Out of that 18 rupees, we ended up paying around 5 rupees as DMF and NMDC. So even after the taxation, I was left with 75 rupees when I declared a price of about 100 rupees. Now this 5 rupees also, like in Chhattisgarh, for us we now declare the basic price. So if I declare it at 100 rupees, my collection from the customer in Karnataka would be the same as collection from my customer at Chhattisgarh. It will be 115 rupees plus 5 rupees. For that is 4 rupees 80 paise actually. Let's take it as 5 rupees from the customer. And for 15 rupees, I'll give it to the state government as royalty. 5 rupees or rather 4.80 rupees, I'll give it to the state government and the trust as DMF and indemnity, and I will retain 100. So my retention from 75 rupees actually goes up to 100 rupees. So that's another 5% added to the bottom line. So that's really, really big time, and we expect that this to be that it accounts for a third of our production almost, and third of our production in sales. That's a big plus point for NMDC. Sorry, I forgot to mention this earlier.
Sure, sir. So just finally, sir, our tax rate, effective tax rate was a little higher this quarter. So, for the full year, we'll probably be back at whatever 25% tax rate or slightly higher than that.
25% plus what you call is the surcharge and some amount of disallowances are there, na? Because if you see the monitoring committee expenses are disallowed, the mine closure obligations is disallowed. So all these, once you add back, CSR is disallowed by the tax authorities. Once you add back these, then the taxes would fall in the correct bracket. And as I said, as and when we realize this 2,848 crores from the Supreme Court order, it will straight away add to our PAT, because we have already paid tax on that expenses, so we cannot be taxed twice over. So naturally that will add up straight to our PAT. Hopefully we will try our best to go. We have not got it for the last 4-5 years despite our efforts. I hope that with the monitoring committee option not being through monitoring committee, I think I would rather hope and expect that we will be able to realize this 2,848 crores. The Supreme Court would be kind enough to give some time and issue a judgment on this.
Okay, so yeah, thank you so much.
Pleasure.
Thank you. The next question is from the line of Kritan Mehta from BOB Capital.
Hello, sir. Good afternoon.
Yes.
Thanks for the opportunity. In terms of the steel plant, you have given a very detail about the commissioning timeline. And first, coil production you expect in sort of the July, August. I just
August would be more realistic. July, because 2 months I'll take to build up coke stock. And once I light the blast furnace, then it is the expressway. So before the lighting of the blast furnace, it is more of a sort of a passenger train, because you need some time to stop and build up the coke stock and all those things. But once you light up the blast furnace, then you have to hit the expressway at full speed. There's no way, because you can't do anything with the hot metal that comes out unless you have the SMS and the rolling mills.
I understood that, but I had a follow-up question on that in terms of how do we think about sort of reaching to a full capacity of 3 million ton? What are the things that would be required from startup to reaching the capacity of 3 million ton? And which are the units which will have to be still commissioned after that?
I am coming to that, yes. I have been told by Denali and other things when I have been interacted with them. And I'm not a technical person, but I'm actually... this is what my information is when I talk to the Denali people who have given the blast furnace, or Denali who is making the thin slab caster, or Prime Metals who is making the SMS and all those things. They say, because these are very state-of-the-art installations, be it's a 4800 M3 blast furnace and the state-of-the-art mills and SMS. They say ramping up these are not really a big time job. They are easy to ramp up, and once you have the raw materials, once you have the stability of operations and you've tested that, commissioning that and got your PG, so ramping up is not supposed to be a challenge as it used to be in the older type blast furnaces and all those mills. So this is what I've been told, that ramping up is not really a major challenge in such state-of-the-art technology items.
Right, sir. That's very useful. Just, are there any further downstream units which would also have to be commissioned after this?
No, blast furnace, SMS, or the BOF, whatever it is, and then the thin slab caster. These are the three main. The first is, of course, the coke oven, and that we have already heated. I said the coke has already arrived, but for the nitrogen plant failing, we would have started pushing coke sometime back itself.
Understood, sir. Second question was about the iron ore industry in India. In terms of, you have highlighted that you would be raising capacity to 47 million ton, that is 6-7 million ton additions. As an Indian industry, which are the other iron ore capacity that those are due for ramp up this year, and how much capacity addition we can expect this year?
We did, as a country, we did 250 million ton or 251 million ton last FY. So what is to be added, I think, is the OMC, the new leases that OMC has got. But most of the leases that they have got is essentially running mines which were auctioned, then surrendered, and then allotted to OMC. So I really do not have the ready-made figures how much that is going to add, because those were, some of them were inoperative for 1 or 2 years, some of them were operating a little below capacity for 1 or couple of years, and some of them were operating So I think from 250 million ton, not much incremental capacity apart from NMDC and OMC is going to come. So let's see how OMC does, because our plans are going from the current 42 to 47, hopefully. And as I said, 3 million ton from Bacheli straight away, 2.5 to 3, and another 2 at least from Kumar Swamy, apart from the organic growth.
Thank you, sir.
Thank you. Next question is from the line of Vikas Singh from Phillip Capital. Please go ahead.
Good afternoon, sir.
Good afternoon.
Sir, just one small clarification. Like we said that with direct auction, we would not have to forego that 20% of...
20% and this 5% of DMF NMDC as well.
But at the same time, we are just considering 10% in ECB, we are just considering 10% of the amount which would come back, that 2848 crore.
Yeah, our contribution to SPV is non-reversible, because that is a fund that has been created for mitigating the environmental damages that were there in those 3 districts. So that would never ever come back to us, because that is going for that special purpose vehicle which has been specially made for with a very specific purpose. What is going to come back is the 10% that was retained on account of NMDC doing its own due diligence, which we have done and which we have showed that we have done. And now it's only what is awaiting is the a date from the Supreme Court and a couple of maximum 2 hearings to get this.
So, sir, regarding the same, so are we saying that this going forward, if we are doing direct sale, so that 10% contribution, which any which way was going to and not recoverable, we don't have to pay going forward that?
As of now, we do not have any orders saying that you must pay 10 crores. We are presuming that since the entire 100 rupees that we said is going to come out to our bank, and in the absence of any specific direction that, okay, out of this 100 rupees, you must deposit 10 rupees with so and so and so for such and such purpose, I do not think that 10% needs to be contributed as the instructions stand as of now. Because itself, what I was reading in the newspaper is itself that the corpus of that 10% of earlier detention of the last 10 years is so huge that spending that itself is a fairly humongous and challenging task.
Understood. So this is not statutory obligation, so we don't have to spend.
As of now, there are no instructions, so I have not been. There's no instruction saying that okay, since you are collecting that 100 rupees right now directly from your customers, that you need to deposit 10 rupees or 5 rupees or 7 rupees with such and such authorities. There are none, and since there are none, we have not. We are presuming that no further contribution is required. And also, we have heard, as I said, that a lot of significant amount of corpus has already been created through this 10% of the last 10 years. So I really don't know whether further such contributions would be required or not. As per our assessment, it would not be required. As of now, as the things stand as of now.
Clarification I needed, sir. Thank you for answering my question.
So Vishal, I think.
Thank you.
1 hour, 20 minutes, Vishal.
Yeah, so we can close now if you are okay, sir.
Thank you. So would you like to make any closing comments?
Oh, yes. I think our coming financial year would be at least as good as the current one, if not better. Certain headwinds in terms of lower prices, etc., I expect to be compensated or sometimes even more than well compensated by certain other developments like taking of the monitoring committee 20% and 5%, 25% additional realization there. So overall, I think, and because again, as I said, even in the macro basis, 58% does not really compete in the direct terms with our 63-64% FE. So on an overall basis, I think that our performance physically will definitely be better than as compared to the last financial year. And even financial will be able to at least hold, if not better, our performance as last year, given the overall compensating nature of the benefits that are there as compared to the headwinds. So we had a great and exciting year behind us last year, and we expect to have a great and exciting year in front of us, where the demerger is due and all those value releases will be there. So it will be overall a better and a healthy balance sheet in this current financial year. So thank you so much, Vishal and your team. And anything else, Vishal?
Yeah. Thank you very much for this elaborate call, sir. I think a lot of investor queries and has been resolved and addressed. So hope we'll have another fantastic year next year again. Thank you very much.
Thank you, Vishal. Thank you. I'll just switch off. I'll log off, right?
Yeah.
Thank you.
Yeah.
Thank you.
Thank you very much. On behalf of Motilal Oswal Financial Services Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.